All right. Well, hello everyone, and welcome back to another VantagePoint YouTube Live. So excited to have everyone here today. Got some big topics to cover and hopefully some even bigger trends. So very excited to dive into more analysis from a top-down approach. So talking about those macro trends and how to pair that up with some other timing pieces like seasonality and different trends within the market. So really how to identify that sort of rotation that happens in the markets and using macro level analysis combined with your technical analysis to really give you as a trader a full picture where you can generate confidence within your own strategies and really identify areas of the market that are going to be moving probably stronger than others in the upcoming months, right? So how do you identify those on your own so you can trade with confidence? So we're going to dive in, but before we do that, just remember that we are in an education setting here. So I'm not a licensed advisor. I'm not going to give you any trading advice. And also, too, remember that as we dive into our simulated environment and go through some hypothetical examples here, that trading is difficult. It does involve risk. All right, so please just make sure you understand that. But I do want to know a little bit more about who we have on the other end of our session today. So if you could just let me know if you are a VantagePoint user already. That's just going to help me tailor our session for maybe some more advanced users, maybe for some beginner users, as well as those who might not know about the power of artificial intelligence in the markets just yet. So if you could just go ahead and type those in the comments section. I'll be keeping an eye on those as we go through the session today. That's going to be very important because, well, listen, I want to cover things that you guys want to cover. So keep those chats coming as we get into our session today. I will be asking for some ticker symbols a little later throughout our time today. You've got me for about another hour, so we're going to have plenty of time to dive into some live analysis as well. So let's jump on into our software and we'll go over how to analyze the software first and just give everybody a good overview. Looks like we do have some newer people to VantagePoint today. So hi Joaquin, hi Ramon, Mojo, thank you guys. So glad to have you all here. Yes, I am going to be keeping an eye on the chat. Billy, thank you. Absolutely. Well, Joaquin, you are in a great place, all right? Because the more education you can get, the more confidence you'll have, and that's exactly why we're here today. So let's jump on into our VantagePoint software, and we'll get to the good stuff, right? That's what I always like to say, is get to the good stuff, get to the charts. All right. Perfect. I am so excited that whether you're a new user or an experienced VantagePoint user, my goal today is to make sure that you take away at least a few key pieces of information that you can utilize and apply to your own strategies and methods of assessment. So whether that's a piece of the process that this can help you with, or maybe it's something about an indicator, one of the predictive indicators you didn't know about before, let's dive into that. If you guys have questions, please jump on into the comments section. That's what I'm here for as the head trainer here at VantagePoint University. I definitely don't shy away from those technical analysis questions. So please pop them in the comments as we go through. That will keep our training on point for you guys. And again, whether you're a VantagePoint user or maybe you're not using the VantagePoint software yet, that's okay. You can find more information at our website. We're going to drop the link in the chat at VantagePointForecast.com, but we'll drop that in the chat for you guys too. Don't hesitate to ask your questions as well, because the artificial intelligence is really powerful here. So I want you to know how to use it also. So let's kick things off here. I'm actually going to jump into some analysis, and I want to show you guys first how everything works. So you can see I've actually got the financial sector up right now. You'll see up at the top XLF. We're going to get to that momentarily. So I'm actually going to jump on over to just a traditional stock. I want everybody to understand how to read the analysis, so that way we're all on the same page moving forward as we dive into some of the more detailed analysis. So I just got BTU or Peabody Energy that has shown up in one of the scans that I've done within the software, and we may have a chance to get to the scans as well. At least that's my hope for today. So if you find yourself struggling to find opportunities, well, we're going to use that macro level of analysis. We're going to use the seasonality to also help us find where to start looking for those types of opportunities. So let's take a look at just how to identify a bullish trend in VantagePoint with confidence, right? I know a lot of traders really like to go long, especially with the market conditions that we've seen here recently. So I'm going to start with that. I'll get my pen out here just so everyone can see. Now, if you take a look where our blue line crosses over the black line, this is our first piece that we're going to be looking for, is confirmation of a bullish trend. And that's identified by this crossover. So when we see a bullish crossover, we would expect the trend to turn green. I always like to say green for go or green for up, if you will. That's going to identify the start of a potentially bullish trend over the next 1, 2, and even 3 days out. And so as we see, we do have that crossover here. The next piece is going to be the neural index. We see that we do have a bullish neural index trending in the up direction as well. Remember, I said green for up, right? And consequently, then red would be for down. So we want to have that confirmation or confluence between the indicators, okay? So it's quite simple. We want everything to agree, right? Things just move smoother when everybody agrees. Same thing with the indicators. The trends typically tend to move smoother when they all agree. So let's make sure we have full agreement between our indicators. And now we can see next is going to be the momentum or predictive differences, as we call them here in VantagePoint. And simply these are measures of strength, but they're very powerful measures of strength because they are predictive. So everything we've walked through so far is going to be your predictive indicators. You want those all in agreement. Nice confluence between the indicators is going to give you confidence as a trader to make an informed trade decision. That's exactly what we want, right? Confidence as a trader to make an informed decision for your trade plan and trade strategy. So let's see where this is expected to continue moving over the next couple of days. This on 12/2 would have been our first signal for potential bullish entry here in this example. All right, so let's take a look at the next piece of the trend. I'm going to clear off some of my drawings. There we go. Everybody can see now. So if we take a look at the next piece of our assessment is going to be more position management. If, again, you had decided to take a trade here, then you would simply manage the position using that blue line staying above the black line and your continued confirmation within the indicator. So we can see that we all have alignment here within the predictive indicators, and now we are even looking at that predictive trading range. So this is the fourth point of confirmation or confluence, if you will, and this is going to give us that expectation of the trade range for the day. What's the expected low? What's the expected high? All right, so basically, how far is price going to travel during the next day? Keep in mind, these updates and these forecasts that you're seeing right here came out last night at 6:30. So we've been looking at them all day, having the chance to utilize this information in the markets today. That's the power of VantagePoint and the power of predictive indicators is that you can use them to be proactive in your trade plan. So managing the position on through today, you could see that BTU had a bullish expectation, sort of continue with confidence, if you will, that we are in this continued bullish trend. And I do believe BTU, markets have just closed, so somebody can double check this on me, but ended up in a nice way today, continuing on our bullish trend. So actually, let's take a look at that today. All right, so let's see where BTU ended at 29.51, so right up towards the upper range of our predictive trade candle. So if we see that here, we can take a look from our entry possible point to 29, right around 29.51 right there, and we've got a really nice potentially bullish move. Now that's where it ended. It did spike a little higher as well during the day, but in 3 days, an almost 9% move. That's the power of artificial intelligence here. So again, if you do have additional questions on if you're not a VantagePoint user, just go to VantagePointForecast.com and we can get you some more information there as well. Perfect. Well, good. I'm glad that you're new. I'm glad that you're here, Angel. I just saw that. So thank you so much. Again, if you're just joining us, please type in any question. Happy to answer those about the software today. So use the chat as we go through. Now, let me ask this. Has anyone ever wondered how to identify where money is moving in the markets? I'll go ahead and give you guys a few seconds to answer in the comments section, because there is a flow of money moving throughout the markets throughout the course of the year, right? This sort of ebb and flow of money movement. And if you've ever wondered how to find that, you can use what we call IntelliScan to do that. It's called sector rotation. Is anyone using sector rotation as part of your analysis? And if you're not sure what that is, just go ahead and type in, I'm not sure. If you do use sector rotation, then just go ahead and say, I use it. Let me know in the comment section. That'll help me just to assess how deep we need to go or how far back to the beginning, right? But before we get to sector rotation, and I'll keep an eye on the chat as that comes in, but before we get to sector rotation, there's a critical component that we need to understand first, and that's the market conditions. That's more that macro level look. It's just, how are the markets doing currently? Are we in an uptrend? Are we expecting bullish conditions? Or are we in a downtrend expecting bearish conditions? Because those overarching market conditions, that macro level look, is going to give you as a trader a really significant advantage as far as what strategy might be best utilized under those current conditions. So really, market conditions determine the strategy. All right. So if you did not know that, then there you have it. You learned something new today, right? So, okay, we've got a lot of I'm not sure's as far as sector rotation and sector assessment. Don't worry, guys, we're going to get there. But before we get to the sectors, we need to back up a step and look at the markets from that big picture look. So who knows some of the major indices? And I know some of you guys are experienced traders in here, so you guys probably know this. But for my newer users and newer traders, do you know some of the major indices? Before I answer that question for you, I'm going to give you guys a chance to type those in the chat. There's kind of 4 primary ones. I'll give you guys a little hint there. And we've got one of them already pulled up in the charts here. So I'll give you a freebie. All right. So that's the Qs. The Qs is going to track the NASDAQ. All right. This is a derivative of the NASDAQ, which is one of the major indexes, those major markets that we need to look at from a market condition standpoint. The major indices are really what set the tone for what the current conditions are in the market. So let's identify the major markets here. And we can do that using ETFs in VantagePoint. So in the market conditions, we'll utilize the ETFs. So that's going to be the NASDAQ or the Qs for that NASDAQ index. Then we can also use the SPY for the S&P. We can use the diamonds, all right, not to be confused with actual diamonds, but diamonds for the Dow Jones Industrial Average. And then we can also use IWM for the Russell, that Russell 2000. So I'll group these all together so you guys can see. I'll just pull my Qs all the way down here so we can see those major indexes. Now, if you trade other areas of the market, you may also want to look at things like energy. In fact, let's pull up some energy here. We could look at oil for that. Things like USO, again, another ETF. You could also look at gold. Do we have any gold traders in the room? Anybody like GLD? Check IWM. Burke, you got it. That's it. Yep. SPX, Billy. Yep, absolutely. All right. Got a couple of right answers here as I was typing those in. I saw them coming in from the corner of my eye over here, so I'm glad you guys were on the same page. So yes, we do have the SPY. We've got the Qs, right? Again, the NASDAQ. We've got the diamonds for the Dow. We've got the Russell for the Russell 2000 or IWM, USO, and then we also have gold as well. All right, so let's start off with just our major indices. And this is a concept that is really going to help us understand the market conditions from that top-down approach. So we would be starting at the top here, right? Perfect. Thank you, Ramon. Well, we'll definitely take a deeper look at that as well. So if you look at your chart, again, we're looking for those 4 points of confirmation and just an overall assessment of where the market conditions are. So let's do this together. All right. So I want you to get ready in the comments section because I'm gonna have you guys help me guide through this as well. On the Qs, I was trying to read and talk at the same time. That's what happens when you're live, right? So if you notice on the Qs that we're on right now, are we bullish or bearish? Would we have a bullish or bearish expectation on the Qs? Knowing what you know about VantagePoint right now, would you expect bullishness or bearishness on the Qs expected today? Let me know in the chat. I'm keeping an eye here so I can see your answers coming in. Yep. Absolutely. So some of you are saying bullish, and that's right, because we see that our blue line has crossed over the black line, right? And that we have a continued bullish expectation, kind of everything's green, right? So when we see everything green, that would be our bullish expectation here. Now, something I want to point out very clearly, all right, is that the predictive differences down here at the bottom, they're not all going up, are they? We have a little bit of sideways movement in the predictive differences. And if you can't see that, you know what? Let me just do something really quickly here, and I'll just pull those up so you guys can see them a little bit more clearly. So you can see now very clearly, as I've made that a lot bigger, that these predictive differences down here at the bottom of the screen are giving us a few mixed signals, but our trend is still bullish. All right, so what that tells us is that we are still in a bullish trend, but we might experience a little bit of weakness in the upcoming day. Well, isn't that exactly what happened in the markets today, right? Did you find yourself kind of on the edge of your seat when you were looking at the NASDAQ today, or maybe when you were looking at the SPY? Well, you wouldn't have had to do that if you just looked at VantagePoint to see, hey, we are still in a confirmed bullish trend, right? But we are seeing maybe a little bit of stalling or pausing in the market conditions. And that's okay. That happens. The markets never move up in a straight line, right? Or if they do, it doesn't last very long. And so we see that we've been in this nice bullish trend. We still have bullish expectation from a price standpoint. And our predictive differences, 2 of the 3 are moving up, but that short term is showing us a little bit of weakness. So understand, we can have some short-term weakness without completely reversing out of a trend. And that's what our market assessment helps us to see from that larger level standpoint is, okay, yes, we're still in a confident bullish trend, but we may experience some weakness today. Don't get over emotional, right? That's the key. Don't get over emotional. Don't trade based on your reactivity to the market. Trade based on the technical analysis, trade based on solid data that's telling you what's expected to happen today so you can navigate through those trends with more confidence and less emotion. All right, I see some questions in the comments. So I'm just gonna come right on over here. Bullish, blue line is over black. Yep, that's absolutely right, Joaquin. And yes, we're still green on the 2-day. Absolutely. We are still green on the 2-day. And that's my point, right? If we actually take a look, and I'm going to show you guys something. For those of you who are newer to VantagePoint, this might be the first time you're seeing that. Or maybe if you haven't seen VantagePoint before, this is a precursor to let you know that depending upon your trade style, you may choose to customize your chart for a shorter term or a more conservative outlook. And that's okay. You have the ability to do that. So if we switch over to our short-term crossover, our short-term crossover is the one-day trend expectation. So if we see that our short-term crossover is still bullish, it's still green, we're still expecting bullish movement in the trend. It just might be slowing. There might be some small weakness within that trend for today. Now, let's take a look at that medium-term crossover. Someone mentioned this in the comments, so I just want to address it. The 2-day crossover, which is our medium-term crossover, is also bullish as well. Bullish expectation, again, confidence over the next 2 days that our trend is likely continuing in that bullish direction. And then let's go on down to the long-term crossover. That long-term crossover, again, remaining bullish. So this is our 3-day trend expectation. If you want to know how to look out 1, 2, and 3 days ahead of a trend, this is how you do it, my friends. You take a look at the 1, the 2, and the 3-day trend expectation based on that predictive data. Remember, this is the intermarket analysis, that advanced artificial intelligence that's pulling in that predictive data for you. Does anybody want to take a look at see what's going on behind the scenes on the Qs? Type in QQQ if you want to take a look at what's driving the Qs. Okay, got a couple of thumbs up. So I'm going to go ahead and just open this up for everybody. So here's the intermarket analysis, those market details that are happening behind the scenes. I'm going to make it nice and big for you guys, okay? So here's the Qs. Again, major index, major indice, looking at this from an ETF standpoint. So if we take a look at what is driving the Qs, we can see that there are various sectors, various individual stocks in blue that are actually driving the Qs. Now, these markets are part of the intermarket analysis, part of that artificial intelligence neural networks that actually go into calculating that predictive data on the 1, 2, and 3-day time frames. So all of this information that we're seeing right here, all right, it's all going into the predictive data that we're seeing on the charts. Keep in mind, every chart that we look at here in VantagePoint is going to have this analysis being done behind the scenes. This is the engine that's driving that predictive analysis. So I'm going to jump out of there. So once we take a look at the Qs, then of course we'd want to look at the SPY, and we can even zoom in, guys. We can zoom in a little closer to see, okay, well, what's really happening today? And I would encourage everyone, if you're using the VantagePoint software already, go ahead and look at the short, the medium, the long term, those 1, 2, and 3-day outlooks, so you can have a better sense of confidence on what to expect from not only a trend standpoint, but also a strength and weakness standpoint as well. And again, these are the major indices. So this is strength and weakness of the major markets here. So here we can see on the short term, we've got bullishness. Let's take a look at that medium term. Medium term on the 2-day, so again, 2-day trend outlook, bullish as well. And the long term, which is a 3-day trend expectation, bullish as well. Now, some possible weakness with our shorter term predictive difference, that light blue line at the bottom of the screen coming down. I'll just highlight that here for you. You can see, I'll just circle it down here at the bottom. That's our shorter term strength indicator. So with that coming down, we're still in a bullish trend, just seeing maybe a little bit of short-term weakness at that point. You can navigate through that as a trader depending upon your risk tolerances. If you're very short term, then you might think about getting in and out based on that short term indication. If you're more of a swing trader, like to hold for a couple of days, maybe a couple of weeks, maybe the medium term. If you like longer position holds, maybe the long term, or even possibly the triple cross, which we'll get to here shortly. So this is the SPY. We can see again in that bullish expectation. So we've looked at 2 of the major markets, and we now can assess from those charts that we're seeing continued bullish trends, right? But we are seeing some short-term weakness. So maybe cautiously optimistic is probably the proper way to describe that. But again, bullishly consolidated, if you would describe that as a trader. Let me know in the chat. You can tell me in the chat how you would describe that as a trader. All right, so next would be the Dow. All right, so let's go ahead and just zoom on in again, just so everybody can see nice and clearly that we are still in a bullish expectation with maybe some shorter term weakness here. So looking at the short term crossover, boom, we've got a bullish short term crossover. Next would be that medium term crossover, 2-day trend outlook. Because who doesn't want to look 1, 2, and even 3 days ahead of the markets, right? Everybody raise your hand for that one. But here we can see bullish trend expectation as well on the 2-day. And then looking at your long term, we also see a bullish trend on the 3-day as well. Now, again, looking down at our predictive differences, we can see some of these moving sideways. Our medium term really is just moving sideways, not a lot of movement up or down. So we may expect to see some stalling on price action as we come into today. And lo and behold, it's really exactly what happened. I think the Dow finished just slightly down for today, but almost at a break-even point. So assessing the major markets can help you understand that today's market, we were expecting to see some possible continued bullishness with maybe a little bit of slowing of that accelerated movement we've seen here recently. Because I'd say the last couple of weeks really has been a very nice, strong trend within the markets. Let's just take a look at that. I'll put that on the shorter term crossover so you guys can see. We had that bullish crossover here on 11/21 with all of our predictive differences moving up. So you guys can see that right here, 11/21, we got the first notification, full confirmation on 11/24 with that nice movement of the crossovers. Oops, sorry guys, my pen was stalling out there for a second. I promise I can draw a straight line most of the time. And neural index is up, predictive differences moving up as well. And we can see the nice trend that then ensued from there. But look, we have a bit of stalling occasionally. Don't worry, VantagePoint's going to help you navigate through that as well. Notice our trend never turned red, right? We can see that the blue line remained above the black line that entire time, giving you the confidence to just keep the emotions at bay, right? And continue as you see fit from a position management standpoint on that continued bullish expectation. Now, again, those are major markets. You could do the same thing for the Russell. We'll just take a quick look. We can see very similar makeup here with the Russell. And then, of course, we could look at US oil. We could look at gold. Someone had asked specifically for gold, so I'm going to jump over to gold here. And again, let's just zoom on in so you guys can see very closely where we're at. Now, we do see some additional weakness in gold here. Now, is anyone seeing where we're looking at that? Now, I'm looking down at the predictive differences, but I'm also going to highlight the neural index as well. So here we have the predictive differences. 2 of the 3 are now heading down, and we have the neural index as bearish as well. But we're still in this bullish trend expectation. So again, slight pullback maybe? Is that what we can gather from this information? And notice we actually saw that happening several days ago. Well, I don't want to say several, maybe a few, right? A couple of days ago, we actually saw this starting to happen. So we saw the short-term difference starting to come down, the medium-term difference starting to come down, and the neural index. Neural index is a 2-day predictor of price, right? So when we see that neural index, we would be maybe slightly cautious. That does not mean get out of the trend, guys. Look at what we're seeing. All of our crossovers are still bullish, right? So just because we have a pullback, and I'm highlighting this because I want you guys to understand, a little bit of short-term weakness does not always mean a reversal. Sometimes the markets have to pull back before they bounce back up. And that is sort of that buy the dip scenario. So how do you navigate through that as a trader? Maybe you have the confidence to stay in. Maybe as it pulls back, you re-enter into the trade. Maybe you're looking for extra confirmation, or maybe you missed the first portion and now you're looking for a better buy point. All of those scenarios are valid. Utilize the predictive information, the predictive data to help you navigate through those trends. But what we can see is that we are still confidently and confirming that we are still in a bullish trend. We might just see some expected weakness or maybe a little bit of caution, right? So how do you assess caution from a trade standpoint? What is your trade strategy there? Does anyone use stop losses? Let me know. Yes, it's great for options trading. Absolutely. I mean, the basis of options is on the underlying asset, right? The movement of the underlying asset. And without getting into too much options, the core of any option strategy is direction and timing. Well, if you can have predictive direction and timing, you set yourself up to be really proactive in your approach to those option strategies. But also, too, understanding those market conditions is key. What is the NASDAQ doing? Are you heavy in tech options, right? If that's the case, make sure you know what's happening in those major markets so you can do a much better assessment and way of analyzing from that top-down approach so you know what strategies would work well under those conditions. So let's talk about those conditions for a second, because there are 3 types of conditions. And I know there's variations of this, but let's just talk about the 3 major conditions. One is going to be bullishness, right? The market's moving up. The next is going to be sideways movement. And then the third would be down. So depending upon what the markets are doing, that can help you determine what strategies might work best. If the markets are going up, right, long positions might be a great opportunity. Markets going sideways, well, maybe some delta neutral opportunities there. Or if the markets are going down, you're either in protection and preservation mode, or from an option standpoint, you're shorting, right? So understanding those major market conditions from a macro level standpoint, again, that sort of 10,000 foot view, is really going to help you as a trader determine what strategy to employ that will work best under the conditions, because you don't really want to go against the grain of the market, right? We want to go with the flow of the market, with the flow of money movement rather than against it. So let's jump into the next piece of this as well. And are there any particular sectors that you guys want to take a look at today? Let me know in the chat. Now, when I say sectors, I mean areas of the market. For those of you who typed in, I'm not sure what a sector is. That's okay. That's just different categories within the market. So let me give a few examples. Things like technology, right? That is a sector of the market, and those stocks typically tend to move together. There's a financial sector or category of the market. Things like banking stocks, right? Those markets typically tend to move together as a whole in that sector. There's typically money movement within the different sectors throughout the course of the year. Right now, you might be thinking things like transportation, right? Or maybe consumer areas of the market with the holiday rush and consumer cyclical sectors maybe starting to ramp up. So type in maybe some sectors that you guys would like to take a look at today. Biotech. All right. Yeah, absolutely, Burke. We can certainly take a look at that. Let me give you a quick and easy way to look at the sectors and really identify what sectors are moving right now. Because if they move in a couple of months, okay, good. We're going to prepare for that. But what's moving right now? What can you use to capitalize on opportunities right now? So let's take a look at that. I'm going to go ahead and jump into our sector scan. I did that pretty quickly. I already had that pulled up, the sector scan, because that's part of the top-down approach, that macro level analysis, then moving down to the next piece. So here you'll notice I've got multiple sectors pulled up in the scan. And, I think it's funny because it's red and green. It kind of looks like a Christmas tree on the screen right now, but I'm going to show you exactly how to analyze this and walk you through it step by step. All right. So COP, gotcha. Mojo, I gotcha. We'll take a look at that as well. Thank you guys for your submissions in the comment section. That just helps us to keep things rolling and, again, keep things relevant. I want to review what you guys want to review, and I know that live analysis is a big part of why you're joining today, so happy to go through that. But let's do some live analysis on the sector rotations also, because if you notice, we've got consumer discretionary up, right? So here's our consumer discretionary. You can think of that as like consumer cyclical, all right? So in the consumer sectors, we're starting to see that sort of holiday rush, if you will, but there are other sectors that are also moving as well. Now, if you notice, you'll see up in the scan and down in the scan. These indicators that I'm looking at in the IntelliScan, all right, are the same indicators that we looked at on the chart. All right, so our crossovers right here, right? Our neural index right here, predictive differences right here, and even that predictive trade candle as well. Oh, let me just move this off the screen. I didn't realize that had gotten in the way. Sorry. There we go. Maybe it just wants to stay there, right? All right, wanted to join us for the session today. So if you take a look at your sector scan, notice you've got the short-term crossover. You've got the medium-term crossover, the long-term crossover, even the triple cross. Isn't that what we just analyzed on the major markets? We took a look at the 1, 2, the 3, and then now you can even add the triple cross in here as well, which is a much more conservative view, looking at more integrity or strength of the trend. And then we have the neural index, right? Your predictive differences, the short, the medium, the long, and of course your predictive trade candle. So voila, your 4 points of confirmation in a scan right here for you, so you can very quickly and very easily see the movement within the individual sectors, which we've plugged into this scan here. You can see a lot of these are going to come from the spider sector, some from commodities, some from US ETF sectors as well. Here's your SPY right here for those of you who wanted to see that, right? So we can see most of the SPY was moving up, but we did have a little bit of caution today with that medium-term difference trend weakening, not reversing, just weakening, right? And then taking a look at some of these others, we had additional sectors like energy. The energy sector was really moving and had money flowing expected today. And we can see energy stocks really moving today. Yes, Lewis, I can certainly take a look at those and specifically support and resistance. So sure, that was a very specific question, but hey, I appreciate that. And we will definitely take a look at those. So if we take a look at some additional sectors, we can even just kind of use our highlighting tool here to take a look at some of the ones that are really kind of on the move. We've got some industrials moving, oil and gas, again, going right along with energies. So this is going to pinpoint and really highlight the areas of the market that have more money flow or more confluence between the indicators, which means more confidence, right? So take a look at some of the markets that are moving, again, just up across the board. So we're looking from left to right just to see, are all things up, or are there areas of caution that we need to maybe watch out for because there might be some slowing in that market, or are they all reversed and we might be expecting a reversal? So this can help you with position management, profit protection, as well as identifying the top areas of the market to sort of shift your focus to, right? So let's take a look. Banking, again, financials were up, banking is up, energy was up significantly, metals and mining, we can see also to transportation. So again, metals and mining up, that was gold, right? So we can see transportation also moving up all the way across the board. I'm just looking to see where do we have areas of the market that are all moving up, all good confirmation, all good confluence amongst the indicators. And that's a quick way to do that within the IntelliScan. I mean, I took time to explain that and teach you how to do it, and we still did that in under 5 minutes. So a quick and easy way to identify what areas of the market maybe you as a trader should shift your focus to. And so let's put this information to good use into another scan. So if you notice, I actually did the scan earlier, and I'll show you some of the results here. But in fact, BTU, the one that we looked at originally, came up in the IntelliScan. That's an energy stock. Do you have more confidence knowing that most energy is moving in that direction right now? Probably so, right? But not only that, we also see that the major markets are shifting in that direction as well. So if you look at the major markets, just again, those overarching trends, oh, my pen is not going to work today, so you'll have to take my word on it. But let's just talk about this sort of 1, 2, 3 step that you can do. So the first is look at the major markets. Are those major markets moving up, down, or sideways? If they're moving up, okay, that's our first step in market conditions. 2, right, is going to be the sectors. Are those sectors moving? What sectors are moving in that same direction as the market? If we can identify the sectors that are moving in that same direction, then we have dual confirmation there from market conditions to the sector. And then the third step would then be the individual opportunities, looking for those opportunities that are, again, moving within those sectors that you identified. So we already have 3 pieces of market confirmation. So we make sure that the flow of money movement, you're following that with your trade strategy versus trying to trade against it. All right. So I'm not saying there's no way to make money by trading against the market. There are counter trend trades, but it's a lot more work for probably a lot less gain as well. So, have you ever heard the term, the trend is your friend? So identify the trend. Where are the major sectors moving that are forming that trend, and then where are the individual opportunities? So there was one. Here's someone had asked about biotech. This is a biotech that just started way back a couple of months ago, and you can see we had that bullish crossover starting back on August the 14th. And just again, continuing that position management all the way through. It doesn't mean that we won't see areas of weakness, right? But again, our blue line stays above the black line, just trending that all the way up. And we can in fact see here that we do have a very significant potential profit here from just that position management, again, using our 4 points of confirmation and managing that blue line over the black line as we move forward. Now, it's not always going to be a grand slam like this. That's why you need to make sure you have good position management, good capital management as well. But using the 4 points of confirmation and managing the positions as we've talked about so far can really lead to some significant trends that you can identify using the IntelliScan. All right. So if you want to know how to find those types of opportunities, 1, take a look at those market conditions, right? Then next would be taking a look at the sectors, identifying what's moving there, and then looking for those individual opportunities. So we can take a look at some recent opportunities that have shown up. And you can see here that we had a fresh bullish crossover right here to the upside, blue line crossing above the black line. We had a bullish neural index, and we had all 3 predictive differences going up. We also at that point in time had that predictive trade candle as well, continuing to the upside, and Salesforce moving to the upside currently with a nice shorter term move thus far. Will it continue? That's where you manage that position. Blue line over black line, trend stays green. We've got some potential confidence there. And then let's take a look at aerospace and defense. I don't know if anybody noticed, but in the sector scan, we saw some aerospace and defense also moving in that up direction as well. And so here we have a nice bullish crossover with full confirmation, full confluence here. Boom, we can see that moving up. We can see the neural index is up. We can see the predictive difference is up. Again, it's just kind of rinse and repeat at that point. It doesn't have to be difficult. It doesn't have to be hard. Keep it simple. Let the software do the work, because keep in mind, VantagePoint's doing all of that analysis behind the scenes using the AI and the neural network and analysis to give you these predictive indicators on the screen. So then we could even take a look at XLF. I told you we'd come back to this. Someone had typed in energy. Someone had typed in biotech as well. So let's come back to the sector scan, because we can open up individual ETFs as well. So XBI is the biotech sector. We can see that here. That's biotech ETF, XBI. So I'm going to go ahead and just open that up straight from the scan. Double click. It's going to open the chart for me. So we can get to the charts straight from the scan. And we did see that we had some weakness here, right? Our short-term crossover was down. And this is where we had talked about a potential pullback, a potential dip, right? So if you notice the overarching trend that we're in currently, if we switch back to a longer term crossover, in fact, I'm going to switch over to the triple cross. Now I'm going to introduce you to the triple cross if you've never seen it before. This is 3 different predictive moving averages on the screen at the same time. And someone had asked about support and resistance. So I'll show you that this darker blue line can really be used as a very dynamic level of support and resistance. This is an 18-day predictive exponential moving average. For my math whizzes out there that want to know exactly what that line is, there you have it. All right. So this is a line that has that predictive data built into it, but can act as that dynamic level of support when price is above, as is our case right now, or resistance when price action, those candles are below that line and it's acting as resistance. Okay, so right now we're in a support scenario. Why? Because price is above the line, and even better yet, it's color coded. So when this is green, then your darker blue T-cross long line is going to be that support level. All right, so when we see a support level holding strong, oftentimes price will revert back to that support level. Okay, but if we see that potential strength resuming within the trend, and guys, look, what do we have here? Strength coming back into the trend, right? So when we see that, that's a potential for a bounce scenario. Does anybody like to buy the dip and take advantage of that bounce off of support? And type in support if that's you, because some traders like that reversion to the mean or buy the dip, but don't always know how to find it. So that's a new thing that maybe you learned today, that you can actually identify those areas using that T-cross long where prices come up, dropped back down, and now resuming that bullish strength can give you a lot of confidence on that continuation of the bullish trend, similar to what we saw in gold, right? So this is XBI. Hopefully that was helpful for, I cannot remember who requested that, but there you are, my friend. All right, so let's take a look. I can certainly take a look at some additional sectors, guys. Absolutely. Someone had requested a specific asset. Some of you had already, so I'm just jumping back through the chat here so I make sure I open those. CMG CLSK. All right, CMG Chipotle. That's going to make me hungry. All right. Who doesn't love tacos or burritos, right? Although it's not Taco Tuesday, right? We should have done this one on a Tuesday session. Chipotle. Sorry, please laugh at my silly jokes. And let's also jump into CLSK. Someone had asked for as well. You got it. All right. Coming on up. All right, Ramon, this one's for you. Let's go to TEM. All right, so with TEM, Ramon, did you have a specific question that you wanted to analyze for today? Because the tech sector was also moving as well, right? So we can jump back over to the sector scan, and I can pull up technology here. We had all of our bullish crossovers kind of moving to the upside. A little bit of caution on the short and the medium term side of strength, but again, still in the bullish expectation, bullish trend primarily. So, using that sector assessment, you can see, and this is actually a great example of what we were just analyzing on the biotech, where we're seeing a potential pullback. So I'm going to go ahead and just put on that T-cross long level. So you can see price action just really sitting right here at this support level, right? So, or support or resistance. We're just sort of stuck in this little bit of a channel here over the last couple of days. So the question is, what's the potential for the breakout? Well, we know the potential for the breakout is likely to the upside. Look at your short-term predictive difference coming up. Also, your neural index is also bullish here as well. And then also too, let me just remove some of these drawings here. My pen apparently wants to freeze all session today, so that's okay. We'll get through it, right? And then you also see the predictive trading candle as well is also bullish. So 3 of the 4 indications bullish. If you jump on over to your medium term crossover, we had that crossover previously, right? And sort of that reversion potentially back to the mean is what we saw on the T-cross long, with then potentially continued bullish expectation. And looks like TEM is up today. I'd love to see what the forecast says tonight at 6:30, if whether we're going to continue that bullish expectation or experience maybe some additional weakness. But if we continue in that bullish expectation, then that is a nice strong trend already establishing, especially if we cross over into the green on that triple cross. So that would be additional confirmation. All right. So just a little extra on this. If we get price action to cross above the T-cross long, and we actually have 2 closes above the T-cross long, 2 consecutive closes above that T-cross long, is going to signify the shift into a stronger bullish expectation. All right, so that hasn't happened just yet. All right, but if it does, then that would be a strong signal of a stronger bullish trend beginning there as well. And let's see, where did we end at today? 76.33. So we have officially kind of broken above that T-cross long the first day. The next day, we would need 2 consecutive closes. So hopefully that was helpful for you there. So I'm going to just jump on over to CMG. Yeah, you probably would want to, for sure. That's my answer to that. So you can see the updates, right? Because we are kind of on the verge of a breakout, one direction or the other. And the predictive indicators will certainly help you to identify that earlier rather than later. So you can take advantage and make sure you're on the right side of that as well. All right, so let's take a look at Chipotle. I've got a bunch of other ticker symbols coming in as well. So I'm keeping an eye on those guys. I see it. I see NVIDIA. I see Tesla. We'll get there. I promise. All right. If I say I promise, then we're going to get to it. All right. Now let's take a look at Chipotle, and we can see Chipotle. We are in that bullish trend. Now, if you take a look back at Chipotle previously, I mean, gosh, guys, this just had a major drop. So you want to talk about protection or preservation of capital. And you want to talk about potential short opportunities. I mean, Chipotle had a great one. And so you can see that we had this crossover here all the way, really until we got those 4 points of confirmation. Didn't really start getting that until about here, where our crossovers were starting to move up. So just using my crosshairs, you can see we might even have looked here, but we can see those crossovers really starting to move up here with the short term. Meaning day of entry possibly there. Here's your crossover to the downside with your predictive difference. Even if you wanted to wait until the next day, you still avoided a huge heartache here or a big win and a nice celebration to the downside here. Let's just take a look at what that, again, give or take, just depending upon what your entry was as well. But that's a 25% drawdown. So, or potential profit depending upon how you're looking at it. But market movement is market movement, and that's what creates opportunities in the market. So with a huge drawdown like that, you're either protecting yourself from a 25% plus loss, or you're taking advantage of that potential gain as well. And then as we jump into the new trend, getting that confirmation here, we can see, even if we just take a look from there to current day, I'm not sure where Chipotle ended today. We had a little bit of consolidation there happening, but still a nice 8-9% move potentially. And again, I'm not saying everyone's going to be able to do that each and every time. It's going to differ on your trade strategy and where you enter, what your position management strategy is as well. But making those trade decisions with confidence, that's what creates the consistency. And that's really the key, is generating that confidence, that consistency in your own trade strategy, so you can make these decisions, keep the emotions at bay, and just trade based on what you see. What are the predictive indicators telling you? Because trust me, they're smarter than you. They're smarter than I, right? So let's go ahead and take a look at CleanSpark. So if we take a look at CleanSpark, I'm going to just jump on over. We've got a fresh crossover right here. In fact, we had full confirmation on 11/25. And I'll show you a potential for earlier entry. Again, depending upon your trade strategy, but you could also use that short-term crossover. If you are a short-term trader, meaning you only like to stay in maybe a day, maybe 1 to 3 days, the short-term crossover might be your new best friend, all right? But understand that it's very sensitive and it is a little riskier, but as is everything that's a little bit more sensitive because it is more sensitive, more reactive to the movement in price action. And so with that increased risk, that's okay. Just have a plan of action to raise your risk management to meet that level of risk, all right? Risk is not necessarily a bad thing, but it's when you ignore it that it becomes a dangerous thing. So if there's risk there, that's okay. Just don't ignore it. Make sure that you're raising your risk management to meet that level. For some of you, that means that maybe you don't take that position. For some of you, maybe that means you take a smaller position. For some of you, maybe that means that you're going to wait until you get more confirmation. Everyone's going to be a little different. No one trade strategy is one size fits all. All right. So, we're here to help you learn how to use the software because it is customizable to everyone's trade strategy. But knowing who you are as a trader is a key point in that. So hopefully some of the information that we've gone over today and the education helps you to just learn about yourself a little bit better as a trader and what might work best for you. What might work best for you might not be what works best for someone else. So let's jump into this shorter term expectation here. So if you notice, you have that bullish crossover to the upside on the short term 1-day trend expectation. That did give you an earlier signal. That was on 11/24, guys. All right. Let me just jump on over to the medium term crossover so you can see the difference here. The medium term crossover you can see is a day later. It's not always going to be a day later. Sometimes they'll cross over at the same time. Sometimes it might be 2 days. It depends on the level of confidence and the predictive data because we're looking out 2 days on the medium term crossover. And the medium term crossover triggers on 11/25. All right, so that might be an additional piece of confidence that you need to add to your position here, right? So maybe you add to the position at the medium term crossover and manage from there. Again, different trade strategies for different traders. All right, so figure out what's really going to work best for you, but knowing how to use these indicators is the key to that. So jumping back over to the short-term crossover here on CleanSpark. And I'll tell you what, if you guys, I've got NVIDIA, I've got Tesla. If you guys want to type in some additional ticker symbols, we can take a look at that. Or if you'd rather take a look at some scan results on some new opportunities that came up in the IntelliScan today, just type in scan and we can look up new opportunities that maybe you hadn't thought of. But we'll certainly take a look at that. Now, somebody had asked about support and resistance, and we had talked about the triple cross as a level of support and resistance. And you can see that the triple cross, the T-cross long level, is now acting as support because our price action has crossed above or closed 2 days above that triple cross 2 days in a row. 2 days consecutively means we have that official break of that resistance level. Now we'll call it support since price is above. So you can see that this is now providing support to this trend. All right, so we are now seeing support from the T-cross long, but if you want additional levels of support and resistance, those can be great for, profit targets, right? Entries, pullbacks. The list goes on how you can utilize support and resistance level channels. I'm going to go ahead and add support and resistance. Everybody's saying scan, scan, scan. Okay, SOXL, I got you, Burke, no problem. Semiconductors, right? So as we take a look, you can see we do have resistance sitting right there at CleanSpark. So with this resistance level, again, is this a little bit more of a cautious standpoint because we're right up against resistance? Possibly, right? unless we can have 2 closes above that resistance level to signify the breakout. So this is why verified support and resistance levels are also a really valuable piece to place on your charts. Now, we do have some optional indicators in VantagePoint that you can add if you haven't seen VantagePoint before. So the indicators we've talked about thus far all come with the software, with the exception of the support and resistance that I just added. But I don't know about anybody else out there, VantagePoint users, but I don't look at a chart without support and resistance because it's just that important. So you can see the potential for us to just kind of come and bang our head on the ceiling. So if you're a shorter term trader, are you using that resistance as a potential profit target? Even if so, you've still got a really nice move of about 10.79%. Is that enough bang for your buck as a trader, right? So take a look at that, decide if it is, great. If price only comes up to hit that next resistance level, is that enough of a profit for you to risk your capital? Those are questions you can ask yourself as a trader before you enter into that trade. And then boom, you've just now managed your position before you even got in, which is really what smart traders do. So be a smart trader, right? Manage your positions properly. All right. That's my PSA for everyone today. All right. So I'm just going to remove that there. And let's take a look at some other. Someone had asked for Tesla. I promised we were going to get to it. I know we're at 5 o'clock right now, so I'm going to just jump into Tesla and NVIDIA and SOXL. I'll stay for a few more minutes if you guys want. Just put continue if you guys want to keep looking at some of these. I'm pretty sure you guys will say yes, but you know, always like to just get confirmation. I don't want to move forward if no one's ready. So let's go SOXL, NVIDIA. We'll do a quick analysis on some of these, and then I'll jump into the scan for you guys. All right. So taking a look at Tesla. There we go. Let's pull up Tesla first. All right. Tesla, bullish expectation, right? So the question is, do we have any levels of risk that we need to assess on Tesla? We can see that Tesla is moving up, right? We have that bullish trend. We've got a bullish neural index. We've got our bullish predictive differences all moving up as well, and the bullish predictive trade candle. All right, so let's take a look and assess from that support and resistance standpoint that now you guys all know how to use. We've broken above that T-cross long, right? So 2 closes above that T-cross long is going to confirm our bullish expectation. If we want to go ahead and put on those verified support and resistance just for a little extra. Oh, goodness. All right, let's see. Of course, when we're in a hurry to do that, right? Okay, so we had a little bit of trouble breaking through resistance. This is a perfect example of why resistance is so important. If you want to know why price stalled out here, guys, here's your resistance level, right? But notice what happened. We broke the resistance. We closed above it. Even on a down day, we closed above it, giving us the indication of renewed bullish strength up against resistance. Those 2 closes above confirmed, and then boom, the potential breakout. Tesla was up at 454 today, right? So right towards the upper range of our predictive trade candle. 450, 453, and guys, Tesla ended at 454.53. You guys asked for Tesla. I just always get amazed still when the software does this. So it's just pretty incredible, the power of that predictive trading range as well. So take a look at that. There was your predicted high. There was your predicted low. And right where we ended near the high at 453.53. So wow. Yeah, that's awesome. I love it when you guys bring these to our attention and the software just showcases itself. It's like, watch what I can do, right? So let's take a look at SOXL. For those of you who stuck with me there, you guys got a good one. SOXL. So any specific questions on SOXL? Continue. I got smiley faces, so I'll take that, right? All right, so let's see. All right, no specific questions on SOXL, Burke, just analysis. All right, so if we take a look at our current crossover, we do see bullishness. We are seeing some potential for some risk, right? So let me just clear off, that was for Tesla. Here we go. So we've got a bullish trend happening here, right? But our neural index is also bullish, so bullish price movement over the next 2 days. But what we're expecting today, and you can see today we had some potential weakness coming in from the predictive difference, that short-term crossover coming down. But also we were expecting some potential weakness here from the predictive trade candle. See how it's shaded red down here on the bottom of the predictive trade candle? So we were expecting a lower low from yesterday. All right, potentially a higher high, but also a lower low. So some of this area of consolidation. Let's see, where did SOXL track today? Let me see what the range was. Let's take a look. 444 to 4610. So right here, 444 to 4610. So it didn't even quite hit the low, but it did stay right in the mid range, 444 to 4610. So we were actually towards the upper range of that predictive trade candle right here. All right. So, again, bullish trend, possibly some consolidation is what we were expecting. And lo and behold, that's really what we got. So I'd keep a close eye on that, knowing that we are coming into some consolidation. We could take a look at the support and resistance as well. So as we potentially come up to try to test this next resistance at 50.16, you may want to be very cautious. We can see there's 2 levels of resistance sitting right there up top. And when they're so close together like that, see that lighter shading of red and then the darker right above it, it's typically a stronger level when they're overlapped so closely. All right, so a little tidbit for everyone. Hopefully that was a little golden nugget for everyone to take away today. I'm going to jump onto NVIDIA really quickly. So NVIDIA, we're kind of getting some mixed signals here. I think it's pretty clear. We don't really have a fully confirmed crossover to the upside. We've got some bearishness happening here. Our short-term crossover is up, so maybe some early on potential shift. But remember what we said about the short-term crossover is also a little riskier as well. So with that short-term crossover, give it just a second, guys. I'm sorry, I'm just having some technical difficulties here. But here we have the short-term crossover. It has crossed bullish. We did have that full confirmation on the short term. But being very sensitive, this can also kind of give you a little bit of a whipsaw similar to what happened back here. So you would want to just exercise caution using that shorter term crossover. Now, again, that risk assessment is going to look a little different for everyone, but I would watch that very closely and watch the predictive differences, because you can see we're stuck in a bit of a channel, and I think this will help to showcase some of that for you as well. I'm going to go ahead and put on that support. So we're stuck right here in between support and resistance, and you can see previous support levels. And then if you even put on your triple cross here, guys, you can see that we do have resistance sitting a little bit closer using that T-cross long level as well. That's why I like to use the verified support and resistance as well as that T-cross long, because that will provide a dynamic level of support and resistance. And in this case, we can see that resistance sitting right there at 184. So we knew we were going to have a possibly hard time hitting that level. And I say that because of what price has done previously. Now, notice price tried to break that level, got rejected, right? And just tumbled right back on down. We tested that level here 2 days ago. Again, rejection. And now, again, we're trying to break that price, having a little bit of a difficult time. But if we can close 2 days above that T-cross long, that would signify a potential shift in the trend. So although we're seeing some shorter term strength, we also see a little bit of caution from that longer term shift in the trend. Although we do know that from a sector standpoint, things are starting to move back in the bullish direction. So will we start to see some strength move back into that trend? I think that's one to watch, right? One to certainly keep a closer eye on. I think NVIDIA ended at 183. So were we able to break that T-cross long level? No, we tried to come back up and retest it. So again, Will we be able to break that T-cross long? I think that'll be a significant shift potentially within the trend, but we watch the predictive indicators and make sure we have strength and confirmation to go along with that as well. I'm not making any predictions outside of what the software is telling us right now, and to watch that carefully. If we can't break above that T-cross long, well then, according to the technical analysis and the predictive indicators, which have proven themselves to be incredibly smart, much smarter than us, then we're still in a bearish trend there. All right, so I'm gonna just go ahead and take a look at the scan that kind of rounds us out on the assets that were requested. So I'm gonna open up IntelliScan again. I know we're a few minutes over, but you guys, I give you what you want, right? So you guys asked for the scan. We're gonna go ahead and open an IntelliScan today. I've got lots of different scans that we could take a look at, but in fact, I'm just gonna go ahead and pull up our bullish reversal, looking for trends that are coming out of a downtrend. All right, so we've seen a lot of that happening recently, especially with the shift in market conditions, right? A shift in market conditions and then following the sector rotation, right? So we can take a look at some of those bullish reversal opportunities, because think about what's been happening in the markets recently. We've seen a shift to the downside, right? And then we saw things coming back up. All right, so in the last couple of weeks, we had that kind of tumultuous, volatile time, and now we're starting to see things picking back up. So with a reversal, well, let's look at reversal types of trends. Again, letting the market conditions dictate the strategy that might work best. It's really that top-down approach. It's a nice trade process to get you in the flow of money movement and in the markets. All right, so let's take a look then at some of the markets. You can see the category right here, guys. This is what we were talking about from that sector rotation standpoint. Category, right? Well, if it wants to stay up for me, so let's just pop that back open. All right, so category right here is going to basically equate to your sectors. All right, that's going to correlate with the sectors. We can see we have basic materials, capital goods, consumer sector. Guys, these are some of the sectors that we saw moving within that sector scan, right? We saw lots of energy. We saw financials, services, technology, right? We saw a lot of those sectors confirming that bullish expectation. And lo and behold, that's a lot of what we have here in this reversal scan pulling up today. I showed you guys that one on AST. I told you that came from the IntelliScan. This is VantagePoint doing the scan, doing the work for you to find the assets that are meeting those 4 points of confirmation, giving you confluence and confidence for these market movements. You've got MicroStrategies here today. You've got SMCI. We've got a couple of different opportunities. Now, just because it comes up in the scan doesn't mean that you're not going to look at the chart. So what you can do from here is just go ahead and open those up. So we could look at MicroStrategies. We could look at Adobe. We'll just go ahead and open some of these up here so you guys can see a nice fresh crossover on MicroStrategies here. All right, do we have that bullish confirmation on the neural index, bullish confirmation on those predictive differences? Absolutely, moving on up through. Let's take a look at that support and resistance as well. So we've got some potential movement from support and resistance. Some movement all the way up to, what is this level, 214, right around there, right? Now, MicroStrategies here, let's take a look at that triple cross level to make sure that we don't have that dynamic resistance. We do. We've got resistance still right here at 200. So we would have to break above that in order to signify that significant shift back to the upside. So could this be a potentially shorter term move? Again, you might only expect that to move up to the T-cross long. Now, if we can break above that T-cross long, then the continuation may occur, but that's not where we're at right now. We're getting that earlier signal. So if I jump back to the short-term crossover, we actually had that short-term crossover happening right here with potential movement. And I mean, MicroStrategy ended at 186 today, so not a bad performance, right? Right there within the predictive trade candle. Let's take a look at the range for today. So day's range was 182 to 191. So it actually did jump all the way up to 191 today. Here's our predicted low, 182, guys. 182.35 was the low, and we had it pegged at 182.32. 3 cents off. I mean, that's just incredibly powerful and incredibly valuable information to have when you talk about timing your entry, pricing, right? And also buying low, selling high. So use that predictive trade candle also, setting stops, risk management, and also entries as well. I'll just open up that scan one more time so you guys can see some of the potential opportunities. Again, what I did here was just use our short, our medium, our long, our triple cross, all those indicators we used on the chart today. They're all plugged into the scan. Now I did have some other qualifiers here on volume and close price, but of course we do additional trainings like this so you guys can see the power here in VantagePoint and know how to really utilize the software to its fullest capabilities. All right, so that rounds out our session for today. Thanks for hanging with me a little longer. I'm glad we got a chance to get to the scan with your just kind of overwhelming continue. So I so appreciate you guys joining us today. Very grateful for you guys who are already VantagePoint family members and grateful for your time. If you are not yet and would like more information on how to join the VantagePoint family and get these incredible forecast ahead of time, again at 6:30 p.m. tonight, our software will update. So VantagePoint traders, you guys can take advantage of the market movement and expectations for tomorrow. Don't forget market assessment, then sector movement, then look for your individual opportunities so you have a nice trade flow and process to follow that's going to get you flowing with the money in the markets and not against it. So hope everyone has a fantastic day, and we will see you guys on our next session. Have a good one.